we can see that now that the fair value gap is respected. So we had this push, and then the Q zone time. So time is very important. At the Q zone time, 2 a.m. New York time zone for the London session, that rejection. So we have this open close price level, which now, for me now, I mean, I'll be expecting to see a pullback then for a bearish continuation to the downside. So here in the 30 minutes, I have this level here. I like precision in trying to identify my level. So let's check the 1 hour. I want to check the 1 hour. Do I mark it from the 30? I want to check the 1 hour. So here in the 1 hour, this is where it is. So to me, the 1 hour zone is much more stronger than a 30-minute level. So in the 30 minute, this is where that rejection level is at. Because this is the 2 a.m. candle and then the rejection to the downside. So this is a rejection block level. When you change that to the line graph, it's going to show us that peak. You can see it's showing us that peak and then the fall. So that is where I would want to set my entry. So this is the London session. We are looking at timing now. The fact that this is the daily level, price did not get there. We had an order here that was not activated. And then we saw volume close below after seeking this. So we went for that to check lower time frame that there is a fair value gap, bearish, inside this bearish block. Here in the 1 hour, we have this open close price. And you can see after mitigating the bearish fair value gap inside this bearish block, it fell to the downside. Not just from the fair value gap, but from this open close price level. Are we together? This is now where I would set my short position. Since now the London session, the full time is about to start. This is the Q zone candle. This is now the session, 3 a.m. New York time zone. So this is where I would set my entry. Stop loss can just, I don't necessarily have to put it here. I can put it above the 50% of this candle week. So let's just assume this is the 50% of that candle week. I don't know. Let's just say that is it. So my target, first target, Asia session low points. And this is 1 to 5.77. Then the long-term perspective, since we are bearish. So let's just say you don't want to possibly assume that the London will go bearish and then New York too will go bearish. But looking at this delivery, it should tell you that the New York too can go bearish because Asia session bullish. So London should be bearish, New York too should be bearish since we are in a bearish perspective. So it means my target now would be this rejection block. On a long-term perspective, I'll be looking at this rejection block level as my target. So that'll be the target. And let's see, this is this is 1 to 10.52. So let's play price to see how this delivers. Let's see. Awesome. So you can see at 3 a.m., which is now the full start of the London session, price came back to the rejection level and fell. Maybe you want to refine the rejection block level, maybe for more sniper entry. Let's see, 15 minutes. Let's assume you wanted to refine it. Let's deal with this. Don't like so many things. So our time window. Okay. So here in the 15 minutes, this is the 15-minute rejection block. Though this movement came, tapped it, and then fell to the downside. So a block can be retested more than once. You can see in the 15 minute, it came, retested the rejection of the 15, fell, came back again, retesting it the second time and still fell. Though this is where we have now the rejection level in the 1 hour. So in the 1 hour, let's say you want to refine the 1 hour on, meaning you come to the 15, meaning the rejection level in the 15-minute time frame. Since the 1 hour rejection level is not mitigated, then that tells you that the 15 minutes, even though it has been mitigated here in the 15 minutes, it can be mitigated again. But now, what can you see now? The 1 hour unmitigated rejection level we mark, which is this blue line. You can see it here in the 15 minutes that it is this most recent candle, unmitigated. You can see it. It is this candle, this most recent candle that is unmitigated. So it means if you're in the 15 minute, you can even set your stop loss way much more lower, meaning your stop loss can be below this high, this candle high. Sorry, can be above this candle high, not below. Above this candle high. So that is trying to further refine your stop loss. So we have our entry at London full session starts, which is 3 a.m. Q zone gave us that reason to anticipate that bearishness, because it came from a fair value gap after sweeping the Asia session high points. So let's go to the 1 hour just to reduce the noise. We're in this position now. So let's see how first target, don't forget, the Asia session low is your first target. So let's play price to see. Okay, price fell. Let's assume your take profit is here. You're out of the market. Simple. So let's put the New York time. The New York time starts by 7 a.m. That is a Q zone for the New York session. And then 8 a.m. So it means if I want to see bearish continuation during the New York session, let this time window tell me the story. Let this time window tell the story. So we have this bearishness to the downside. Let's further play price to see. Okay. So preparing for New York. Okay. So now we're about to get into the New York session. So let's see. This is 5 a.m. So let's deal with this candle so that we can check the 4-hour, because I believe the next 4-hour candle should be gained by 5. Let's deal with this. Let's look at 4-hour. What is 4-hour telling us? Let's see. Okay. So here in the 4-hour time frame. So you can see here in the 4-hour, what you have is this candle wick. You have this long candle wick that fell. So, within a candle wick, when you drop to lower time frame, you see candles with volume. So that is why in the 1-hour, we saw the candles that are inside this 4-hour candle wick. So here in the 4-hour now, what we can see is rejection to the downside. So it means, let's look at something. Okay. Fell to the downside. 4-hour fell to the downside. So what we have in the 4-hour here, you can see is this engulfed. This candle swept to this high. You can see these two 4-hour candles are the Asia session. So this candle swept to this high, engulfing candle to the downside. So what you can now see, this is how I look at the market. That's why in the last lessons I showed us our open close price are important levels also. So we have price here fell to the downside, and what you can see is first, this Asia session movement fell to the down, because if you are looking at it here, it means this is a push, this is a pullback, and then a push. Now ask yourself, where is the level? You ask yourself, where is the level that made this push after this pullback? Where's the level that pushed it? It is this open close price. It is this open close price here that gave us that push. So that is a 4-hour level. Let's see. So that's a 4-hour level. That gave us the push to the upside. And now volume traded to the downside, an engulfing candle. We want to see the validity of this engulfing to give us a continuation during New York. So it means we have to find the opposite level that was violated. And what we can see that we have, it is this key level, because we had this pullback that pushed price up, and now price traded to the downside, volume closing below it. Now we are preparing for the New York. So it means that it is either we see price react from this 4-hour level and continue bearish. So it's already telling us the story. It means I didn't remove the right candle from the 1-hour time frame. I was supposed to remove it from the 5 a.m. because from 5 a.m. we are having new 4-hour candle being formed. So looking at it now, since we've already seen it, it's fine. Let's just deal with it. Let me deal with it. So it means that this level was broken. This is where the pullback happened before the push. So New York session, preparing for New York. If we're going to be bearish, it is either we see price react from this and falls, or price can push further into this candle. It mustn't be at the tip of this before it falls. So back to the 1-hour time frame. This is what we are seeing. Okay, awesome. So here in the 1-hour time frame, what we are seeing is that price volume closed below this rejection level. This volume closed below it, giving us that possibility that price may want to violate it, because this is the volume of this buy candle to the upside. This is the volume, the low of it, and this has traded below it, because now we know we are bearish. Price is coming to the downside of things. Or you can now check 30 minutes, 15 minutes. You just want to establish that structural reason, a valid structural reason for yourself. In the 15-minute here, you have a change in state of delivery. Sorry, here in the 30 minutes, a change in state of delivery. Bearish impulse. So it means we can look forward to bearish possibility during New York because Asia is already bullish. Q zone period for the London, mitigation, and a fall. You are looking at the possible bearish continuation during the New York. So you have to establish it before the New York starts. So it means that now before New York starts, this is the 4-hour level. Just slightly above the 4-hour level is this bearish fair value gap here in the 30 minutes time frame. So within the Q zone, it is either price comes into this, look at how it reacts during the time. Then that tells you if now you can now go bearish to the downside. So let's go to the 1-hour time frame. Let's see how price delivers to the downside. Let's play price to see. Okay, this candle. Now, New York Q zone is about to start. So 1 hour has given you this bearish fair value gap, though we saw that from 30 minutes. So 1 hour has given us this bearish fair value gap, which is now within the 4-hour engulfing candle. So let's see what happens within this time window. It is either price comes into this fair value gap or price would want to react from the opposing open close price where this pullback happened that sponsored this before price fell to the downside, because that tells you that now this is a breakout block also, because here you have the sell movement, the last sell before the buy that took out this high, price came back and violated it. So that is a breakout level. So let's see now the Q zone for the New York session. Let's be price to see. Okay, so now this is now the Q zone for New York, which is 7 a.m. But then what we can see is that price went bearish to the downside. I would not jump bearish because I've established that I have a fair value gap here and then a 4-hour level that sponsored, because it's an opposing open close price here, that sponsored this bullishness that took out this price, fell to the downside, breaking it. This served as a breaker already. This zone served as a breaker. So you already know you have a breaker zone here. You have a breaker here, just likely above a fair value gap. So possibly now we can see an entry at the breaker. So let's see what happens. So this is already Q zone. Now this is going to be the full session starts. So it means I could anticipate a pullback to the upside, but then I would not want to jump at it. Why? Because this is the 4-hour level. Yeah, it's a breakout block, we know. And then, but there is a fair value gap above. Price could decide to want to dip more higher before falling. So in such cases, I don't necessarily set a pending order. I look at some things to find clarity before I set a pending order. That's just the way I look at it. So we have that. So maybe you want to see much more candle delivery. You can stay in the 30 minutes, stay in the 15 minutes. Let's see what happens. Let's pay price to see. Okay. Now 8 a.m. price is coming to the upside. Okay. Let's see. Okay. Price is pushing to the upside. Breaker level. Fair value gap is above. We have now, what can you see here in 30 minutes? We have liquidity resting here. We have liquidity resting here. So it means that I could set entry just above the liquidity then, because now we have liquidity resting here in 30 minutes. That fair value gap, which we saw in the 1 hour, here 30 minutes also we are seeing a fair value gap. This is not clear. I would not want to take this. Anyway, because this trade too, it was just from the London session. So I can't even say how the New York delivery was. Let me see. Let's see. Okay. Okay. This is 8 a.m. The New York session full starts. This is the Q zone time, 7 a.m. So price traded to the upside. Now you can see where it reacted from is that 4-hour. Price did not seek this high. I was expecting to see price possibly takes out. But anyway, price took out a liquidity here. Swept this candle high. Took out liquidity. Fell to the downside. An immediate fall to the downside. It has seek this, meaning the breaker is holding. Then I can take these chances here. can take these chances. Let's see. So we have volume traded up below this. So you have a bearish block. You are expecting bearish continuation. Don't forget, we've established the bias. We are bearish. So this is a breaker 4-hour level we marked, because that is also the breaker in the 1 hour. So we are seeing this, and then you have the tip of it, the peak of it. When you change that to line graph, that's the peak. So that is also a rejection block, because that's a long candle. We swept this liquidity. So let's see. I could set short position here. This is New York trade setup. Let's see how it happens. Stop loss can be above the wick. Targets the breaker. We are bearish. You can decide to since you've established from the higher time frame, you are bearish. So you can go as low as saying you're setting it to possibly this last sell movement before this buy. But I am showing you how I will just do it. That's just what I'm showing you. So this is what we have. Let's pay price to see. Okay, awesome. Let's see. Awesome. So what we can see is timing. I said timing is important. This is New York full session starts. This is the Q zone. Price gave us a movement bullish to the upside. Definitely we are expecting a pullback to see that bearish continuation. Price has to pull back to a level. So we identify from the 4-hour time frame. Let's get to the 4-hour time frame. What we saw in the 4-hour time frame is this. We saw this is a deeper pullback. This candle dipped to the downside. Where did the pullback happen? It came into this open close price, this opposite open close price. You can see it respected it because volume closed above it. I showed you the structure. I showed you the structure of it. This is the structure of it. It's a push, a pullback, and a push, and price fell. Where is the level that made this pullback to just continue to the upside? Go to the 1 hour, you see it. It's a valid pullback. You can see it. It's a valid pullback. See it here. It's a valid pullback. Where is the level that made this pullback to hold? It is this 4-hour level. Then price went bullish, fell, breaking this low. And don't forget, the high that gave the movement that broke this low took out liquidity already before coming to break this low. So we identified the level here that gave us this movement, and then price fell, breaking it. So it means that in alignment to that level, what do we have in this movement? It's a breakout block. Because this push took out this, price fell, breaking it. It's a breakout block. And slightly above it is the 1 hour fair value gap. Let's see something here. Let's deal with this. Sorry, I just saw something. You can see price even traded more into the 1 hour fair value gap. Are we together? See, if you sit with the market, use this timing I'm telling you, go and backtest, you would see it for yourself. Backtest it and backtest it. So it came back. I'm taking my time. I want you to understand this. You must understand it. I don't believe that even that person can understand. I must be able to understand it. That is how I believe. That is how I live. Now, this is the full start of the New York session. It did that bullish rise. The next candle, it is, even though you don't have an entry here immediately within the time window, pay attention to the next hour after that time window. What happened? It went to the upside. Close below now. We saw that from the 30-minute. That helps us define our entry because this swept a buy side liquidity. We saw it. It swept a liquidity. Here in the 1 hour, you can see our price even went further into this fair value gap, dropped to the downside. In the 30 minutes, let's see in the 30 minutes, definitely, okay, so just to make things clear, for clarity's sake, so that you can really see that what I'm pointing from the 1 hour really happened here. So let this appear in the minute time frame. Let's deal with this. I can deal with this so that I can see the clarity. Anyway, so you see this is this trade setup is 1 to 12.86. Anyway, it is 1 to 10 point something. Went to the 15 minute and further refined it. But assuming you took it from the 1 hour, it's just 1 to 10 point something ratio. Then this one is 1 to 3.27. That's a good one. I don't trade every day. You don't need to trade every day. You see, build mastery. That is all. Let's see 30 minutes time frame. I just want to explain that. So you can see it came into that 1 hour fair value gap. It just tapped it a little into it. Just tapped a little. They seeked this liquidity. Just tapped it a little, fell. A little fell. Engulfing candle. Rejection level. I took the entry from the rejection level. Stop was above the 4-hour level. Boom, to the downside. It means that this 4-hour level is being respected, which is also the breaker we saw in the 1 hour. It came from the fair value. It's the same thing that just happened, just like what happened here. Respecting this fair value gap, came below it and the open close price level of this here, respecting it. That was why I said, okay, we can now take the shot, because the kill zone time was what traded to the fair value gap and gave the rejection. Boom, to the downside. Boom, further again. New York continuation to the downside. So, with this fulfillment, I don't need these levels. I'm done with them. Now I'll be preparing for a new day. I don't need these levels. For now, I don't need them. I deal with the time also, because it means that this day I am done. I can just leave this. It could serve as a point. Maybe in the future, maybe price could come react at this and continue. So I could leave here, because it's now like a strong high. It swept this. So let's just leave it. I don't think price would further come here. We are done. We are strongly bearish. We've established that from the monthly to the daily, to the weekly to the daily. So we are preparing for a new trading day. Let's mark that. So that should start from, okay. So let's play this day to have the full fulfillment. Let's see what happened. Okay. I don't care what happened again. I'm not taking a position once I'm done. That is all. Let's see. Okay. Still within now, this hours that we are seeing here is a New York London close hour. So let's play price to see. Okay. Price is bearish. Okay, what can we see here? Let's see. Price just came back, reacted at this breaker. Awesome. You see, just reacted at this breaker and then falling again, because this took out buy side, so it's like a strong zone. So price just reacted at it, fell. Let's see it in 1 hour. Let's see it in 1 hour. Yeah, you can see that's the buy candle before the sell movement. Price just came to it, fell. You can see it here in 1 hour clearly too. You can see it swept buy side. Swept buy side, fell. So price just came. I don't care. I've taken my profit. I don't care what's happening. Let's play price. Okay. All right. So that was all that happened this day. So once I'm done that day, what you do is you go to the daily time frame. Now we're done with this day. Nothing for us. So let's go to the daily time frame. Daily, or you can check for hour. Just want to look through your time frame. What happened? So we can see 4 hour bearish to the downside. Awesome. Now, does that mean that this is where you should just go bullish? Let's deal with this. Does that mean because this bullish impulse happened here, you are now saying that you want to be bullish from this block? No, you don't need to be, because it is still showing you that it has been respected. The bearish side of things is still happening. And we've established it from the monthly, weekly, down to the daily. And now we are looking at daily from each day perspective. Every day, what is happening now? We are looking at it also from that side of things. So that doesn't mean you are bullish. That is why I said higher time frame story is very powerful. Sorry, that doesn't mean you are bullish. Or what did I say? Just forgive me. Please just try and understand if I make mistakes. So that doesn't mean you are bullish yet. So it means that a high has to be broken to really tell you that you are now like strongly bullish. So what I notice some of you are trying to do is trying to catch a move so early before it even tells you the story. That is the problem. You're trying to catch something so early before it tells you the story. So if we are bullish, then it means this high needs to be taken to tell me that yes, I'm strongly bullish. But then if you're seeing highs taken here, like these internal highs, then you can be bullish to target, okay, price can seek this buy side, come into this, and could reverse. Until this high is strongly broken, you are not yet strongly bullish. You are still bearish. Trend line. Let's say we are trend line traders. Trend line traders don't care about you're trying to know order flow, whatsoever, they stick to it. This is my trend line. Until this trend line is broken to them, they are not bullish. The problem with SMC, they believe they always catch something fast. That is what we believe. We like catching the things fast. We don't force the story. Don't force it. Don't force what is not there. Wait for it to tell you this is it. So let's assume you want to catch bullish and wait. Maybe let the bullish movement shows you that yes, it's going to break. Let's say this. Let's just assume it's going to break this. Let's say you start seeing that movement and then it goes like this, and you see volo trades above this. Then it means that this 4 hour is possibly holding. Then you may target to see a pullback. You trade. Where would you trade to first? Buy side here. If it's going to give you a good RR, this buy side. Next is this bearish block here. So if you have that trend line, we assume that means you're targeting here. Not the one you are now expecting it to just boom, just push. No. Are we together? So not that one that you're expecting it boom, just push. No. That is not what you should expect. Wait for the story to be clear. If it breaks this, then it means the next draw on liquidity, there's the fair value gap there, okay? Even though this served liquidity, what we can see here, it was mitigated. The movement that served this liquidity was mitigated by this and fell. So it means, meaning this could no longer be valid. So price would want to aim the buy side. Okay, there's a fair value gap, bearish block, because this traded swept this. So it's like a strong high. So trade to that side. Not that you just expect to set, let's say, for example, you believe that this will just hold. And you are not really seeing the true structure. And then you just assume it, and then you set long here. Boom. Maybe here, and then you're just looking at boom. No. Please be patient. Always wait for the story. Wait for the story to be clear. So let's look at the next day. Sorry. I'm just trying to just make things much more clearer for us. So we don't need these levels. Let's just leave this daily. Let's see. Let's go back to the daily now. Since we are looking into a new day, Wednesday. So you can see price left that place I was looking at. I told you we identified that inversion. And then we saw this level unmitigated, this candle that served this. So I was like, okay, price should come into this before we go bearish. But you can see price did not. So it can happen that price may not really come into your zone. So that was why now you can see how we looked at it in the lower time frame. We saw that, okay, there is a fair value gap there. And at the key zone of London, 2 a.m., we saw how it rejected. So price and time are very important. Price and time, they are very important. You can just stick to your structure. When you are just sticking to structure, at times you may not get to just take some trade. But when you understand sessions also, you take advantage of that. Okay, this session, this happens for Asia. It sweeps Asia high. We can just see a possible short movement to the downside. I can leverage that if I'm bearish. So take the bearish move. So now we are going into a new day. Now you can see why I said don't regard this movement that happened on Monday and then say you are bullish because you saw this rejection. Then even when we saw this rejection, we went to the lower time frame. There wasn't a break of structure to the upside. So why should I jump bullish? There is no reason for me to jump bullish. So bearish, you can say, okay, this here swept liquidity. What can you see? Price just came back, took out this, and then went bearish, took out this high. That's on Monday's high, and then went bearish. So we are still bearish because this volume is trading below this. Change that to a line graph. You can see it means this low has been broken. This low has been broken. Where's the reaction coming from? A weekly zone. Inside the weekly zone, it went into the daily and started falling. The line chart shows you the close price, the candlestick. Now we have this volume. So we are still expecting that bearish possibility to the downside the next day. So what do you now do? It is now to identify. Where am I looking at? First, this is a breaker. This is a breaker. Now from the daily, this is a breaker. Now you get to, this is a breaker block. Okay. I love it to really stay on the volume. All right. This is the breaker. I said, I don't like using these stuffs. If you want to mark it now, you can say, okay, you have your breaker. So now we have that. So this is a daily level. So meaning this is a breaker zone. So it means price could, now for the next trading day, we could see price come here. And then we have the bearish continuation. That is what we may see happen in the markets. So with this established now, but now we have, so now from the daily, this is what we are looking at. The possibility that this breakout would be what would hold price, since this already took out buy side and then fell to the downside. This is a candle wick. So at most, it means it is this breaker that could serve as where price could come and then give us the rejection to the downside. But then this is how I look at it. I always look at where did price react from? What happened? Where is another level that price really came from? So now what you have to look at is this. This came right into that fair value gap. We don't need that fair value gap. That's why I removed it. I don't want so much line. This came down into that fair value gap. And not just the fair value gap. What you can see is that it respected also this sell movement before the buy movement, because after the rejection, it closed above it. And not just that, what you can now see, since you are looking at where you could possibly find an entry for the next day, these are something you know. It's not like they are new things. Now, here in this thing here, what you are going to see that you have here in the 4 hour was that bullish order block that this movement came to and gave this bullish movement. So it means that this open close price too was still respected. You're trying to look at where really did this rejection respect? Where are those zones, those levels that this rejection respected? You can see it respected, yeah, the bullish fair value gap. And we had this sell movement before the buy movement. And this sell movement gave us like the mean threshold of that bullish fair value gap. So it gave us like the mean threshold. These are details I look at. Let me see. Let's see. Yeah. It's almost like at the mean threshold of it, of this fair value gap. So you don't need that fair value gap. So it means this gave us this rejection to the upside. This key level 2 was still respected. Let me show you what I said in